Hi fellow traders, this video is about a sell trade setup at Euro USD in short term. I have entered my sell right below low of this candle. The low of this candle was 11.29. I have entered at 11.28.1, and I'll show you my stop loss as well as take profit target. This trade is based on technical analysis only, because I don't see any influential news or any economic data to be released in upcoming week. There is Chicago PMI, which is scheduled to be released on Monday, December 30. There is no data, there is no news related to Euro or USD before Monday, December 30. So I believe even if the market will be slow, we will probably get our target. So here is my entry point, just right below this candle. You can either set sell limit right below this candle around 11.28, 11.29 area, or you can enter right now, depends on your decision. So what I see on the chart is market was trying to go up from here. So there are 2-3 setups which you can identify here. It looks like a head and shoulder, like this left shoulder, this is the head, this right shoulder a little extended. Nevertheless, some people will consider this as head and shoulder. Another thing is the failure of head and shoulder can still be possible around this area or this area, which will be neckline. And sometimes neckline is not drawn horizontally, it is drawn like this, and this also is considered a neckline. And then the distance between the head and the neckline and the target are measured like this. I mean, it's not measured vertically, instead it's measured like this. For example, if the distance here is from this to this point, so if you are measuring like this, then the target will be also measured like this with the same kind of angle. So that is very extended target. This area is 10.21. I am not targeting 10.21, but this is the one ideology which will support the same idea, that is the sell USD, sell Euro USD. So but my technical my technical tools are going to give you a different target, not 10.21. We will try to exit the position very soon, because market is gonna go slow because of Christmas. So what I am targeting is different. Let me plot some tools and then I'll show you what I'm targeting. Initially it looked like the A, B, C, D retracement. So if we try to measure the distance of A, B and C, D, we will understand whether or not this is harmonic in terms of length, and then we will be able to understand how relevant this pattern is. So if we measure the distance A, B, C, D, so this was precisely 100%, just I think a little below. It was almost touched. 1176 was almost touched. The high was just a second, the high of this candle was 11.74.5. so this has almost completed the ABCD. But the only problem with this pattern was the speed of the CD leg. The CD leg from this point to this point, it was faster than the AB leg, so it didn't seem like retracement, and it looked like it is going to retest the previous high around 1.1200. But when this entire movement has been erased, then I entered myself, which is why I said that I entered myself below this point. So this is why I entered when price penetrated below, because this movement was faster. So a faster movement is generally not considered as retracement, which is why instead of entering right after this candle, I waited until here. This candle also was a bearish engulfing, and it could have been a sell signal, but I have seen that the many other bearish engulfing candles in this movement was gradually erased. For example, this was a bearish engulfing candle. Market slowly and gradually erased this and made a new high. This was a bearish engulfing, this was a bearish engulfing, but market gradually went to the upside, gradually went to the sideways, and then faster moved to the upside. That's why I didn't take any sell signal as per this bearish candle, and I considered selling when this entire CD move was erased and price penetrated below this. So basically this is a Gartley kind of pattern. and this has been validated after penetration of this point. So if I try to plot my triangle, then this will be something like this will be the left arm, and this will be the right arm, and this is the Gartley. So now the bigger pattern is from this point to that. This is a bearish Gartley completed already, and if we measure the retracement, where did it coincide? Then it coincided at something around 61.8, not right at 61.8, but it returned from the area 61.8%. So now we have to target the A, B, C and D to the downside. This will be the bigger ABCD, A, B, and this is the C point, and this will be the movement to the downside. So let's plot extension tool again from this point to this point. Let me take help of the magnet mode. All right, so okay, the 100% target is 1085.4, and this is coinciding with Fibonacci 50% retracement level of the whole move up on the daily time frame. So if we go to the daily time frame and plot Fibonacci, then we will see this agreement between this ABCD and the Fibonacci retracement level to the downside. I'm switching to the daily time frame, just a second. $10.85. Well, let me plot these levels to the right side because these are looking very cluttery now. So let's make it clutter free. Coordinates. Oh, sorry, I'm just trying to edit triangle. Instead, I have to edit the extension. Just 1 minute. Anyway, let it be, because I'm not very familiar with this chart, so I'll not be able to find the extension here. Maybe I'll click on the extension, it will be clicked automatically on the triangle. So just remember this area is 10.85.4, and now draw Fibonacci. So let's, from this point to this point, this is the whole move up on daily time frame. Excuse me, this is not the whole move up, sorry, and this is the whole move up on the daily time frame, because this was just a single day movement. This was not even a swing, so we cannot take this into consideration, because this is a swing trading style. So this is the entire swing up, and the 50% level, as I said, is coinciding with your ABCD 100%. 50% is around 1090, and the ABCD 100% from this, like A, B, C, D. So this is 1085.4, and this is 1090. Only there is a difference of 5 pips. So this trade is feasible. We can target something between 1090 and 1085, maybe 1086, 1087.5 plus added spread. So something around 1087 will be the target of this trade. So how many pips do we have on the table to gain if we enter at 1128? We have from 1128 to 1088. So this will be around 40 pips target, 40 pips take profit. And let's measure the stop loss now, and also I'll show you where I'm placing my stop loss and what is my idea behind placing the stop loss there. So if you look at this movement, I believe that the price shouldn't go back to this area. This was the previous consolidation. and this area will be a very significant area if price comes to something around like this or this, because you know we do not have a horizontal neckline. The neckline here is like this, so this already seems to be broken. But if we place horizontal line, then price may return from this area or this area, and if returns and it goes back to the previous consolidation around here. This was a long consolidation for almost 1 2 3 4 5 6 7 8 9 10 11 hours, almost half a day. So then there is a question mark on this sell trade setup. Maybe this will not complete your ABCD 100, which is why I suggest to take the loss. So this area is around 1150. Also is a psychological round number, 1150. So if price goes and if it hits 1150, and if the 1 hour candle closes above 1150, I suggest to take the loss and exit the position. So that's all about this trade. If there is any question, you can just comment. Thank you for watching.